Alphabet has been my top rated stock all year long in 2024, and it's performed relatively well, trading at $163 per share today, where it started the year at $140 per share. But how much is Alphabet stock really worth if we look at the intrinsic value doing a discounted cash flow valuation? That's what I'm going to do in this video. I'm going to derive an estimate for what I think Alphabet stock price is worth today, and then we can compare it with the current market price to see how much upside there's left or to determine how much Alphabet stock is undervalued. Now, of course, I'm going to use several assumptions and estimates to make this stock price estimate, and I'm going to share with you precisely where I'm getting these numbers so that you can determine yourself whether or not these estimates are too optimistic, too pessimistic, or right on point. I want to thank the Motley Fool for sponsoring this video. Visit fool.com/Parkev for the 10 best stocks to buy now. Of course, we need the current market price, which I highlighted as $163 per share, so that we can compare it against the intrinsic value we determine to see if the stock is undervalued or overvalued. I also need the company's free cash flow for the most recent period, trailing 12 months, $60.79 billion. This is the base I'm going to forecast the company's future free cash flows from. I need the company's average diluted share count, which stood at 12.72 billion. You can see the share count falling considerably for Alphabet. The company's been buying back tens of billions of dollars of its own shares. That reduces the share count, thereby increasing the earnings per share. I also need Alphabet's long-term debt, which stands at $11.88 billion. And the market cap is just over $2 trillion. And finally, the cash and equivalents balance of $27.23 billion. To make my growth rate estimate, I'm going to use the Wall Street Analyst forecast for what they expect Alphabet's earnings per share growth rate will be in the next 5 years. According to the Wall Street analysts that are following Alphabet stock, they think its EPS growth rate will be 20% over the next 5 years, below the 24% it achieved in the previous 5 years. Okay, now that we have all the estimates and assumptions we need to make our stock price target for Alphabet, we can go ahead and start our evaluation and calculation. I want to draw your attention here to 2024 free cash flow estimated at $60.79 billion. I shouldn't say estimated. This is the actual trailing 12-month free cash flow for Alphabet of $60.79 billion. I'm going to forecast its cash flows over the next 11 years using various growth rates. So for the short term, over the next 5 years, I'm forecasting its growth rate at 20%. This is the number I got from Yahoo Finance, the Wall Street estimate. Then the next 5 years, I'm going to use a 50% of the previous 5 years rate of growth. So from 20%, I'm having it fall to 10% over the next 5 years. And then I'm having the company settle down at the long-term growth rate of 5%. So I have a multi-stage free cash flow valuation model here, where the first stage of growth is 20%, the second stage of growth is 10%, and the third stage of growth is 5%. And I have this happening in 5-year increments here from 2024 to 2030. I have the 20%, and then from 2031 to 2034, I have the 10%, and then starting 2035, I have the 5% growth rate forecasted. Now, when we collect all of these free cash flows to the present value, we get a value of $891 billion. Now, you'll notice that I discounted those cash flows in the future because for all of us, money in the future is worth less than money today for several reasons, including that if you had the money today, you can invest it in something else and earn a rate of return. Whereas if you're getting the same amount of money later, it's worth less to you because you missed out on those rates of return you could have earned. So for that reason, we're discounting those cash flows to the present value. Next, let's look at the terminal value. This number collects all of the expected cash flows discounted between the year 2035 and infinity. And the formula for this is taking that 1 year ahead free cash flow estimate, which is 2035 in our case, and dividing it by the weighted average cost of capital subtracted by the long run growth rate, which is 5% in this case here. So we have that terminal value of 5.4 trillion for Alphabet stock. But again, we need to get the present value of this number because this is the value in the year 2034, and the present value of the terminal value is 2.1 trillion. If we collect all the present values of the expected discounted cash flows for Alphabet, I get a value of operations of $3 trillion. Now, the discount rate I'm using for Alphabet, the weighted average cost of capital, is 9.87%. I'm using a cost of debt of 6.5%, which I'm deriving by adding 250 basis points as a premium to the 4% risk-free rate currently for the 10-year government bond. Also, I'm applying the capital asset pricing model to arrive at the company's cost of equity of 10.24%, using a beta of 1.04, which I got from Yahoo Finance, and a market risk premium of 6%. Overall, I'm assuming the capital structure for Alphabet as 90% equity and 10% debt, even though right now total debt is a much smaller percentage of the company's overall capitalization. I expect the company in future years to shift the capital structure more weighted towards debt because debt offers a lower cost of capital for Alphabet and it offers a lower overall weighted average cost of capital, which companies' management typically tries to minimize. They try to find that sweet spot which minimizes the weighted average cost of capital, because the lower weighted average cost of capital is, the higher the valuation will be for the company's share price. And these are the tools that Wall Street and most Wall Street analysts use to value a company's shares. Okay, so now that we've done all that, we can come over here to the value of operations, which stands at 3 trillion. We need to add the company's cash balance, which was 27.2 billion, and subtract the debt balance, which was 11 billion. That gives us the value of equity of 3.026 trillion. If we divide that by the number of shares outstanding, which stands at 12.72 billion, we get an intrinsic value per share for Alphabet stock at $237 per share, $237.95 per share to be precise. Now, compared with the current market price of $163 per share, my estimate suggests that Alphabet stock is undervalued. And this also is the conclusion I arrived at when conducting different valuation estimates using different models, including a multiples evaluation and looking at the company's prospects and other risks, etc. As you can see, of the dozens and dozens of videos I've done on Alphabet stock. So you can understand why I've had Alphabet stock rated as the top stock to buy this year in 2024. Full disclosure, I have owned Alphabet stock since about 2020, following the crash induced by the lockdown phase of the pandemic. That's when I really loaded up on Alphabet stock. And so right now, $237 per share intrinsic value, but that's using the 5% growth rate. If we apply different scenarios, if I was to use a 6% long run growth rate, the intrinsic value per share would be $283. If I use the 4% long-term growth rate, the intrinsic value would be $208. If I use the 3% long-term growth rate, the intrinsic value would be $187. But my base case is for Alphabet's long-term growth of 5%. And I arrive at that because that's the nominal rate of growth I expect for the worldwide economy, in the worldwide developed economies in 2035 and beyond. I use the nominal growth rate because the company's cash flows increase nominally, not adjusted for inflation. So regular GDP, real GDP at roughly 2.5%, and then roughly 2.5% expected inflation to arrive at the 5% long-term growth rate. But again, if you don't think that is the right growth rate to use, I've modeled out 3 different scenarios of growth rates to use. Now, let me remind you, this should be for entertainment purposes only. If you're interested in investing in Alphabet stock, I highly encourage you to do your own due diligence. Perhaps use this tool as well as some other tools to conduct your evaluation of Alphabet stock. Hey everyone, I'm excited to announce that my book is finally available for sale. I've been working on it for more than a year now, so I'm really excited to finally share this with you now. It goes through my framework for evaluating stocks. Some of you often ask why I like this stock or why I like the other stock, and this framework provides you the things that I look at when I'm evaluating stocks. I've added the link in the description below.